Today's Talk About It Tuesday question is, I recently got an indexed universal life insurance policy for my infant daughter. Is that a good investment? So I've probably done 4, maybe 5 different videos in the past addressing cash value life insurance policies and the pros and cons. But I guess I have not been clear, so I'm not going to beat around the bush. I'm not going to pull any punches. I'm going to make it plain so that you understand what it is, what is the value, and what are the detriments. So I'm going to relay a story first, and then maybe it will make it clear as to how I came to this conclusion. So when I was 22 years old, and this is before the internet, so when I was 22 years old, fresh out of college, I had a really good job, the highest paying job that I had ever to that point in my life. It was the beginning of a 15-year career that I had at that point, and I was making great money. So I wanted to establish my financial independence from my parents. And so the first order of business was to get an apartment. So I got my first apartment when I was 22 years old. And I was just smart enough to know that I shouldn't squander all this newfound income that I had, but just dumb enough, or I should say ignorant enough, to make some really poor financial decisions. So I always say you need to really check where you get your financial information from. So I started this by saying there was no internet. This is 1989. I'll just give it away, right? 1989, no internet. Not a lot of books on financial planning that I had access to anyway. And so I worked at a job of highly educated people. Most people had advanced degrees. Most people were making really good salaries, and they were, I guess what you could, middle income earners. So they had a middle class lifestyle. So I knew, having grown up in a poor neighborhood, that I couldn't listen to poor people and get good financial information. So I was getting my information from middle class people. But here's the situation. Middle class people can only give you middle class decisions and put you in a middle class lifestyle. I didn't know any wealthy people, so I didn't have that level of sophistication to draw from. So everybody who was older than me, who decided to mentor me, and again, always from the heart, good intentions, said that there were certain things I need to have in place. Now, again, I'm 22 years old, and they said that I needed to have a life insurance policy, and I needed to start investing. And so I'm not even going to get into the poor investments that I made based on that, but let me just tell you about the life insurance. So again, 22 years old, not married, no children. And someone referred me to an insurance broker from a major insurance company. And it was a much older man. He was probably in his 60s. He came, and again, I'm 22, wanted to establish my financial independence from my parents, so I didn't consult my parents at all. I wanted to make these moves and show that I was grown. And he totally took advantage of that and suggested that I get this, back then they called it whole life insurance, right? Didn't even really tell me about term life, but he suggested that I get this whole life because I can pay into it and it builds cash value. Now, anybody who's never had money, when they hear cash value, says, wow, this must be good, right? Because the other insurance that was offered, which he didn't really offer, he said, Dad, that's not good because after a term, it runs out. And then you got to renew, and then the premium is higher, and it didn't build any cash value all those years you was paying into it. And so all I kept hearing is cash value. He said you can borrow from it tax-free, cash value, cash value. And all these things from an unsophisticated mind sounded like this was the best thing in the world. Like, how could I have never known about this? This has got to be the best decision. I got to pay into it anyway, and so I might as well get this cash value that later on I can borrow from and not have to pay taxes on. So long story short, he sold me the policy at 22, super high premiums. And it wasn't until years later that I realized it wasn't a really good idea. Because one, life insurance is not an investment, right? And as a matter of fact, it ended up being part of a class action suit against that company, and I won and got some money out of it because they sold it to me as an investment. Life insurance is a death benefit. And at 22 years old, with no children, no spouse, I put my parents down as the beneficiaries. I had a $100,000 policy, which made no sense. I was paying $100 a month in 1989. Made no sense because I had no estate where I had debt attached to it. I had no loss of income for a spouse or situation where children had to be taken care of. All I needed was enough that my parents didn't have to come out of pocket to bury me. So at that time, in 1989, a $10,000 policy would have been sufficient, in which I probably would have paid pennies, a couple of dollars a month, as opposed to $100 a month. Maybe I'd pay $10 a month or less, probably $5 a month at 22 years old and in good health. But instead, I paid $100 a month. And then when I got rid of the policy, like 5 or 6 years later, the cash value was only $5,000, which was insane because it was this idea that I'll have all this money. So over time, insurance companies have gotten great at marketing, and so they changed. Whole life got a bad name to it, and so they started changing. Okay, universal life, variable rate universal life, and all these, and then they came up now this indexed universal life. So what is indexed universal life? So the cash value, again, which makes no sense because you should separate your investing from your death benefit. Your death benefit is a death benefit, and investment is an investment. You're just being lazy trying to combine the two, and you're shortchanging yourself. The cash value is based on an index, right? So usually the S&P 500, same as an index fund, except with Index Universal Life, they take fees, commissions, a high premium, all these other things that get deducted from the amount that goes into the index fund. And they put a cap on how much you can make from the index fund. So no matter how well the index fund does, usually they'll cap it, say, at maybe 10%. But it could be doing 15, 20%, doesn't matter. You're only going to get 10%. Sometimes they give you only percentage, right? You get 70% of what the current value is, not to exceed the 10%. So that makes no sense to me at all, why you wouldn't just do an index fund when you can do zero fee index funds with Vanguard or Fidelity, and some of the other big brokerage houses will give you a literally zero fee index fund. So they try to sell it. They say, well, if you borrow against it, you don't have to pay capital gains tax. Well, you don't pay capital gains tax on your unrealized gains in an index fund anyway. So what does that mean? Your gains are only on paper until you pull money out, right? And if you cash it out, then you will pay capital gains on it. Whether you stop paying the premiums on your index fund and have to cash it out, you'll pay taxes. If you cash out your money on a regular index fund, then you'll pay capital gains tax on the realized gain. As long as it's gaining on paper, you don't have to pay taxes on it in an index fund. And they say, well, you can borrow against your index universal life insurance policy. You can borrow, you can do a loan at any brokerage house against your portfolio, and probably at a much better rate, and you don't pay taxes on that either. They say, well, it's good for Social Security because if you borrow against it, it doesn't go against the income and doesn't mess up your Social Security. But again, you can do the same thing with an index fund. So you can do all the stuff that you can do in an IUL by yourself. Get a term life insurance policy that's dirt cheap with a high payout for death benefit, because that's what it's for. It's not an inheritance, it's a death benefit. And you can separately get into an index fund for sometimes $20, $25 if you want to start, and put in as much as you want, as much as you can afford over time. And again, you don't pay capital gains tax on unrealized gains. So it can be growing, growing, and growing. You're not paying a dime on that unless you pull money out. You can borrow against it the same way you could an index universal life insurance policy. There's zero fees, so all of your money goes to the index fund. There's no extra premiums and all this in percentage. It's all your money. So is it a good investment? Insurance is insurance. It is not an investment. Investments are investments. They're not insurance. And they should never be commingled. They should never be combined. Anytime you combine them, you're taking away from both of them. So I don't know how much more plain and clear to make it. You need to calculate how much money you need as a death benefit based on your life circumstances. If you are 22 years old, not married, and no children, you need enough for somebody to bury you, period. That's it. But you can get for a tiny amount of money, and the money you would have wasted on premiums to get some cash value, which is not real cash value, it's your money that you're borrowing against, and they take most of it. You can invest and have all of it. So I don't know how many times to say it. Okay, so let me just make it, just knock it home. One thing that I learned early on, because I have friends who sell insurance. They're brokers and agents. They are given almost no commission for selling term life insurance. Almost nothing. Whereas when they sell these cash value policies, they get a huge commission up front and they get paid on it. As long as you're paying the premium, a piece of that money, a piece of that premium goes to them. So you got to ask yourself, when they're selling it to you, are they selling you what's best for you or what's best for them? And that's pretty much all I have to say about it. If you don't get it by now, then you're just making an emotional decision, not based on logic and the numbers, because the numbers don't lie. But I'd really like to hear your experience with it. I had a horrible experience when I was 22, but I learned. I've been telling people ever since, it's terrible. I'd like to hear your comments. Please like, share, subscribe. Keep the questions coming, and I'll see you next Tuesday.